Good morning, students. Welcome you all on live learning classes organized by Board of Studies of ICAI for CA Final. Today, students, I am going to cover Paper 1 Financial Reporting, and today's topic is Introduction to Ind AS. That is, what is Ind AS? What is roadmap and applicability of Ind AS to various entities? And I will also be covering Division 2 of Schedule 3. Friends, my name is Alok Garg, and by the profession, I am a chartered accountant and a company secretary. I am also a diploma IFRS from UK and certified Ind AS from ICAI. Friends, I am an honors graduate and I have more than 17 years of experience. So I started my career with practice, and right now I'm heading a financial reporting vertical of a large listed entity. Friends, I'm also author of few books on Ind AS and Schedule 3. So this is about my brief introduction. To start with, friends, so far we all have heard about accounting standard, right? These classes are for May 2024 examination. If you have any query, friends, relating to this course, relating to the Ind AS, relating to the topic, so you can post your query on the query link which is given to all of you. So I have access to that query link, and on the real time basis, I will share the answers of those or share the responses of those queries which is raised by you, right? So I can see a lot of staff here. I can see a lot of students here. Ananta, Mansha, Viraj. So few students belongs to the last batch only. So good to see you all. Just to start with, so far in CA Inter, we have only heard about accounting standard, right? But in CA Final, Indian accounting standard is there. So what is difference between accounting standard and what is Indian accounting standard, right? Friends, if I talk about accounting standard, there are 29 accounting standard, AS1 to AS29. But technically speaking, there are not 29 accounting standard. AS6 is not there and AS8 is also not there, right? So technically speaking, there are only 27 accounting standard. And these accounting standards we have learned, we have discussed, we have heard in our CA Inter or IPCC curriculum, right? But in CA final curriculum, accounting standards are not there. Indian accounting standards are there. But whatever you have read so far, whatever practically you have applied so far in CA Inter, of course, this will help you in learning Indian accounting standard. If I have to give you just a comfort or a filler, I can say that if you have a good knowledge of accounting standard, probably 50 to 60% concept it's same what you have read in accounting standard, it is there in Indian accounting standard, it is there in Ind AS, right? Friends, the short form, or I would say the acronym of the small form is Ind AS, but the full form is Indian accounting standard, right? Indian accounting standard. This we are going to discuss or we are going to learn in CA final financial reporting paper. Okay. If someone will ask you what your financial reporting paper consists of, I can say that 95% is Indian accounting standard. 95% is Ind AS. Okay. Now, how many Ind AS are there? There are 39 Ind AS, which we are going to discuss. Okay. One by one, not today. In the next 3 to 4 months, we will be covering these 39 Indian accounting standards. Friends, as we have also understood, so this is the Indian scenario. In India, accounting standards are there, and in India, Ind AS are there, right? Two set of accounting standards are there. One is called as accounting standard, which I'll also call as previous GAAP, or which I will also call as old accounting standard. When I'll call new accounting standard, it is Ind AS. So these two sets are applicable in India as of now, right? And that is why we are going to discuss the applicability of Ind AS. Okay. So which set of entities AS apply and which set of entities Ind AS apply, we are going to discuss that. But in India, there are two set of accounting standard, AS and Ind AS. Okay. Globally, there is IFRS. What is the full form of IFRS? It's International Financial Reporting Standards. So globally, there is a IFRS. Okay. And friends, Indian accounting standard is also a step, I would say, since our India is one of the largest economy of the world, and we are also exposed to we are an open economy and we are exposed to the entire world. And friends, that is why our financial reporting framework should also align with the global framework. Okay, so that more and more investors will come and more investors will invest in our country. For investing in any country's companies, for investing in any company, what you will require? You will require the financial statement. If the financial statement would have been prepared in a local language means local reporting language, for example, old accounting standard, probably the overseas investors will not be able to understand our financial statement. But if our financial statement have been prepared and in foreign language means foreign reporting language, right? Like IFRS, overseas investors will be able to understand our financial statement before investing, right? So friends, that is why we have moved to Indian accounting standard, which is nothing. It's a Indian version of IFRS applicable to India, right? I'll discuss this in detail, but for the time being, Indian accounting standard are the converged version of IFRS applicable to India, right? This is a younger brother to IFRS, I can say that. Now, friends, if I talk about Ind AS and IFRS, Ind AS are approximate 99.7% cut copy paste of IFRS, I can say that, right? So if you are very much excited about accounting standard, right, and you have an option to choose an elective paper, in that case, my recommendation to all of you is to choose your GFRS paper. What is GFRS paper? In the GFRS paper, it is nothing, it's a IFRS. GFRS is nothing, it's a IFRS, okay? And when I'm saying about IFRS, right, so when you have a knowledge of Ind AS, you have attended all the classes of Ind AS, you have done a lot of practice on Ind AS, then IFRS is nothing, it's only a name change, okay? So by doing Ind AS, by learning Ind AS, your elective paper will simultaneously get prepared, okay? And it will give you two things. Number one preparation will help you in two paper. Number two, this will make you robust about accounting and accounting standards. Number three, if financial reporting excites you in the industry, right, or statutory audit excites you in the industry or big four, probably this is a right choice. Number four, by having this IFRS paper, which is elective paper, which is GFRS paper, probably you will be exposed to the foreign companies as well, MNCs as well. Why? Because in MNCs, Ind AS is not there, IFRS is there, right? So these are the benefits of having this GFRS paper, right? So this IFRS is nothing, it's a global, and AS and Ind AS are the local standard. I hope you got some context about these three set of standards. Accounting standard you have read in CA Inter. Ind AS you are going to read in financial reporting paper, and IFRS, if you will elect your GFRS paper, in that case IFRS is there. IFRS are the global standard, and that is why the name is International Financial Reporting Standards. Okay, is that clear, friends? I hope it is clear. Okay, now if I talk about today's agenda, I'm going to discuss about what is Ind AS, right? What is Ind AS? From where these Ind AS came? So I'll talk about introduction and overview of Indian accounting standard. Number two, since India as a country, we have two set of accounting standard. One is old AS, second is new Ind AS. So I am going to discuss Ind AS are applicable on which set of entities. Very, very, very important. Third, I am going to cover the format of financial statement, right, under Ind AS. And when I'm talking about format of financial statement, it is Schedule 3, right? But in Schedule 3, format is also applicable to companies which are applying AS. Format is also given for companies which are applying Ind AS. So I am going to talk about the division 2 to Schedule 3, okay, as far as format of financial statement is concerned. So these are the three agenda which I have today with all of you, right? I hope the context is clear to all of you guys. I hope the context is clear. Yeah, very good. Is that clear? Okay, let's move on. So yes, in the new syllabus, in the new scheme, no elective is there, but the I'm talking about the students who have already opted or who are into the old syllabus. Okay. Yes, let's move on. And as I have told you, this Ind AS came from IFRS. And first of all, I'll give you an introduction of IFRS. Okay. Then I'll come to Ind AS. Friends, if you will look at the screen, there is a Mike who is from France. Okay. The another gentleman is Me TP from Hong Kong. Me TP from Hong Kong. Okay. The third one is Morris from Kenya. The fourth one is Mukono from Japan. Is Max from Australia. And the last one is Mr. Kejriwal from India. These six gentlemen went to London to attend a meeting. Okay. And they have to discuss, they have to deliberate, they have to argue on some agenda. Now the problem is Mike, who is from France, only knows French language. Mi Chi P, who is from Hong Kong, only knows Chinese language. Morris from Kenya only knows Mandarin. Muko Ono from Japan only knows Japanese language. Max knows English and Mr. Kejriwal only knows Hindi language. Do you think that the meeting will be fruitful? Do you think the meeting will be fruitful? Yeah. Do you think the meeting will be fruitful, guys? Yes, you are right. Meeting will not be fruitful. Okay. Meeting will not be fruitful. Okay. Why? What is the problem? What is the problem, guys? What is the problem, guys? The problem is language. Language is the problem, right? Since these six gentlemen knows their local language, they will not be able to understand each other's language. They will not be able to understand each other's language. They will not be able to communicate. They will not be able to make others understand, right? And that is why meeting will not be fruitful, because the problem is language. Language is the problem. Okay. Language is the problem. Now, friends, what could be the solution here? What could be the solution? The solution is common language should be there. If everyone will know some common language, probably this meeting will be fruitful. Probably they will arrive at some agenda, right? So if they will use a common language, a standard language, then they will be able to understand each other's, right? They will be able to give their opinion. They will be able to understand each other. So language is the problem. And what is the solution? The solution is standard language, common language is the solution. Likewise, friends, if I talk about, how many countries are there in the world? Can anyone tell me how many countries are there in the world? Can you tell me how many countries are there in the world? Yes, you are right, Rahul. Almost 200 countries. 200 countries are there in the world. And do you know how many reporting gaps are there in the world? Generally accepted accounting principle, like I would say, Indian gap, US gap, UK gap, African gap, Canadian gap, Australian gap, right? Singapore gap, Bhutanese gap, Pakistani gap, right? Do you know how many reporting gaps are there in the world? More than 100 reporting gaps are there in the world. 100 ways of accounting and reporting are there in the world. Japanese gap, Chinese gap, Bhutanese gap, right? Australian gap, African gap. More than 100 gaps are there in the world. Now, friend, if this gentleman Mike has to invest in the company led by Mr. Kejriwal, Mike is in France and he knows French gap, right? And Mr. Kejriwal prepare its accounts on the basis of accounting standard. So do you think that Mike will be able to easily understand the financial statement of Mr. Kejriwal? Right? Or Mi Chi, who is from Hong Kong, who is following Hong Kong gap, has to invest in the company of Mr. Muko Ono, which is on Japanese gap. Right? And again, Mr. Max has to invest in the company of Mr. Mi Chi. So Max knows Australian gap and Mi Chi has prepared its financial statement on the basis of Hong Kong gap. So do you think that they will be able to understand each other's financial statement, which is prepared under a different local language, which is prepared under different reporting gap? Yeah. Yeah. Yes, Ritik, you're right. They will not be able to understand the financial statement prepared in others gap. Okay. Why? Because they know their local gap. They know their local gap. So friends, if I am an overseas investor, right? I want to invest in different companies which are located in different jurisdiction, different countries. For me, the problem is understanding the financial statement, because before investing, the first document which every investor refer is financial statement. But these financial statements have been prepared in different reporting language, right? Now the question arises that the problem here is the reporting language, right? And what could be the solution? The solution could be the common reporting language. The common reporting language could be the solution. Now question arises, what could be the common reporting language? Friends, if sitting in India, someone will tell me that please follow Chinese gap. Would I be happy to follow Chinese gap? Or let's say to Japan, if someone will tell you that you have to follow Indian gap, whether Japan would be happy in accepting Indian gap, I mean to say old accounting standard? Answer is no. Then what could be the global standard which everyone wants to follow? So everyone will wants to follow that kind of standard which is applicable to everyone and which is not a country or jurisdiction specific. For example, Indian gap, US gap, UK gap, Australian gap, French gap, Hong Kong gap, Japanese gap, Australian gap. What is common in all these words? What is common in all these words? What is common in all these words? People are saying gap. People are saying gap. Gap word is not common here. You are the accounting students. Go by the substance, not by the form. Prefix is common here. And what is a prefix? Prefix is name of the country. Do you understand? Name of the country. Australian gap, French gap, Canadian gap, right? Hong Kong gap, African gap, Indian gap. So in all these names, the name of the country comes first. It means all these standards, all these gaps are country specific, jurisdiction specific, right? And friends, what is the full form of IFRS? What is the full form of IFRS? Full form of IFRS is International Financial Reporting Standards. Have you found any name of the country in the name of IFRS? Have you found any name of the country? Yeah? No? It's international, it's global. International Financial Reporting Standards, right? So whether the jurisdiction wants to follow IFRS, answer is yes, because it is not because international financial reporting standard is not a country specific. It is not a jurisdiction specific. It is a global standard which anyone can accept, right? So that is why people are moving towards IFRS. And friends, out of 200 countries, more than 160 countries are using IFRS, right? More than 160 countries are using IFRS. IFRS are drafted in such a manner. IFRS are drafted in such a manner, right, that it is not a jurisdiction specific. It is not a jurisdiction specific, right? It is not a country specific. For example, if I talk about IFRS standard have been drafted in London, right? The IASB, International Accounting Standard Board, like ICAI, there is a IASB. This IASB is located in London, right? Do you think that the London UK economy is an agriculture based economy? Answer is no. But they have also drafted IFRS standard on agriculture accounting, right? So that African countries, which is agriculture rich countries, so they can follow that standard, right? So UK economy is not a hyperinflationary economy, right? Like Zimbabwe. Zimbabwe is a hyperinflationary economy, but UK economy is not a hyperinflationary economy. But they have also drafted standard on hyperinflation. So what I'm trying to convey you, so IFRS standard, when these standards have been drafted, so entire world has been taken into consideration, not only a jurisdiction of the country where these standards are getting drafted, right? So that is why, friends, more than 160 countries are using IFRS. If I talk about the entire GDP of the world, close to 95 trillion US dollar GDP is there, right? The GDP of the entire world is 95 trillion US dollar. And out of 95 trillion US dollar, close to 50 trillion US dollar is reporting into IFRS, right? So friends, that is why countries are converging to IFRS or adopting IFRS. Like India has not done the full adoption. India has done the convergence. Okay. So India's Indian accounting standard is 99.7% IFRS, I would say. It's only 0.3% high, right? And again, just to reiterate, friends, you are right. So elective paper is not there in the new course. Okay. So I was talking about the old course only. But let me tell you, if you are learning Ind AS, it will help you in IFRS as well. When you will qualify your examination, and when you go to the MNC companies, probably just you have to do the name change only. Name change means, for example, here we are calling Ind AS, there it is called as IFRS. But the concepts are just cut, copy, paste. Okay. Is that clear, friends? Yes, in the new syllabus, there is one standard, there is one paper, which is integrated business solutions. Okay. Yes. Okay, friend. Shall I move forward? Now we have understood this IFRS standard, that how this IFRS standard is getting a prominence across the world. Okay. We are only talking about IFRS. Now let me give you some history about IFRS, and then I'll go to Ind AS. Okay. Friends, in 1973, right, prior to 1973, there was no global standard. And there were many countries in the world which does not have its own accounting and reporting framework, right? So in 1973, a committee was formed by few member nations, and name of the committee was International Accounting Standard Committee. Please write down IASC. Please write down IASC, means International Accounting Standard Committee. This committee was formed in 1973. This committee was formed in 1973 to global standard, right? To issue international standard. And what was the objective? Why they want to issue the international standard? They want to help the entire world. For example, Africa. Africa does not have their own standard, so they can use this standard. For example, Bhutan. In 2016, ICAI has drafted accounting standard for Bhutan on the basis of IFRS, right? Middle East, like UAE, okay, Dubai, Abu Dhabi, they are also referring IFRS. So there are so many countries in the world which does not have its own accounting standard, and they started referring this global standard directly instead of preparing their own standard. Like India has prepared its own standard, accounting standard. Okay. So friends, in 1973, International Accounting Standard Committee was formed to develop global standard, which is known as International Accounting Standard, which was known as International Accounting Standard, right? And friends, from 1973 to 2001, this committee has issued 41 international accounting standard. 41. In 28 years, this committee has issued 41 international accounting standard. Right, friends? 41 international accounting standard in 3 decades, in 28 years. And friends, this International Accounting Standard Committee has one sister concern also. And the name of that sister concern was Standing Interpretation Committee. What is the meaning of this? Friends, I'll give you a very small example. You all know about accounting standard, right? You have read this accounting standard in your CA intermediate as well. And you have also used this accounting standard in your articleship. Friends, there is one standard, AS 16. Accounting standard 16 talks about borrowing cost. In borrowing cost, there is a concept of qualifying asset, right? And in the qualifying asset, what is meant by qualifying asset? Which takes substantial period of time for getting ready for intended use or sale. So friends, when AS 16 was drafted, when accounting standard 16 was drafted, at that point of time, qualifying asset, in the qualifying asset definition, substantial period of time was not defined, right? What is meaning of substantial period of time? It was not defined. Then ICAI has come up with an interpretation known as Accounting Standard Interpretation, ASI, and they have issued ASI 1. And you know what that ASI 1 and what was ASI 1? What ASI 1 talks about? ASI 1 talks about your meaning of substantial period of time. That substantial period of time means more than 12 months, right? They have not made any changes to the standard. They have just clarified what is the meaning of substantial period of time. And friends, why these interpretations are important? These interpretations are important just to provide some clarification in the standard, right? If you will change your accounting standard, it requires Ministry of Corporate Affairs approval, right? And they have just inserted a clarification that this is the meaning of substantial period of time. Friends, likewise, International Accounting Standard Committee job was to issue international accounting standard, and Standing Interpretation Committee job was to provide the clarification in those international accounting standard. So there were two different committees, International Accounting Standard Committee and Standing Interpretation Committee. Is that clear? I'm only talking about history. Friends, since this committee has operated for 28 long years, and in the 3 decades, if I talk about from 1970 to 2000, in 3 decades, the entire scenario of the world has been changed. Lot of economies becomes open economy, which was not earlier open economy. The volume of the transaction has got increased. The liberalization has happened in a lot of countries, right? The export import has been increased. A lot of new concepts have been evolved, and even the fraud and scams was also detected. So in that case, these global standard setters had a meeting. They had convened a meeting, and they discussed and decided that these international accounting standards are now 3 decade old international accounting standard. So looking into the way the world is changing, looking into the scam and frauds which are happening, so probably we need to revamp or revise our existing structure of the global standard. With this objective, friends, in 2001, I am talking about 2001, they have demised International Accounting Standard Committee and Standing Interpretation Committee. They have demise these two committees, and these two committees are replaced by IASB and IFRIC. In 2001, they have inducted International Accounting Standard Board, which had replaced International Accounting Standard Committee. And they have also inducted International Financial Reporting Interpretation Committee, which had also replaced Standing Interpretation Committee. Technically speaking, the name of these two committees have been changed. So this International Accounting Standard Committee and Standing Interpretation Committee name has been changed. Their constitution has been changed, and the new board was formed. And the name of the new board was International Accounting Standard Board, which is live as of now. And the new interpretation committee name was International Financial Reporting Interpretation Committee. And they have told that now what we will do. So the job of International Accounting Standard Board and International Financial Reporting Interpretation Committee was to review the old International Accounting Standard. And wherever they have found that, they are required to change the old International Accounting Standard. Why? Because a lot of amendment is required. So in that case, they have deleted International Accounting Standard and they have introduced new International Accounting Standard in the name of IFRS. So the name of the IFRS standard, or the name of IFRS, started in 2001. And friends, as of now, they have issued 16 IFRS, 16 International Financial Reporting Standard as of now. Right? Friends, out of 41 IAS, they have deleted 17 IAS. Why? Because a lot of changes were required. So instead of 17 IAS, they have issued 16 IFRS. Sir, why 16 instead of 17? Because there were two standard on revenue in old IAS. So instead of two standard on revenue, they have issued one IFRS 15. And that is why instead of 17 IAS, there is a 16 IFRS. And friends, they had continued with the old 24 IAS. Why? Because major changes were not there. Small changes were there. They have just done the small changes and they have continued with old 24 IAS. So if someone will ask you, for example, if you are appearing in some global paper, okay, for example, you are appearing in Diploma IFRS from UK, or let's say you are going for an MNC company's interview for financial reporting profile. So if they will ask you how many IFRS are there, so you will not say only 16 IFRS, you will say 16 IFRS and 24 International Accounting Standard. These 16 IFRS had been issued after 2001 and this 24 IAS had been issued before 2001, but it is as good as reviewed by the International Accounting Standard Board, right? Likewise, friends, so today we have 40 global standards and we have 5 standing interpretation committees interpretation and 15 IFRIC interpretation. So in total, we have around 60 guidance, 40 standards and 20 interpretations globally. So this is the global guidance. I hope it is clear to everyone. I hope it is clear to everyone, friends. Is that clear? Is that clear, friends? Is that clear to all of you? I hope I am audible. Okay. I got the response from Deepak, Ritvik, Rahul, Soumya. Very good. Okay. Yes. Friends, as of now, as I told you, there are 40 international standards. Out of 40 international standards, there are 16 IFRS, which are issued by International Accounting Standard Board. And there are 24 International Accounting Standards, which are developed by International Accounting Standard Committee, but reviewed by International Accounting Standard Board. And there are 15 IFRIC interpretation, and there are 5 SIC interpretation. So these are the 60 guidance which we are having globally. Okay. Is that clear? 60 guidance, 40 standard, 20 interpretations. Yes. Move on. India has converged to IFRS, not adopted IFRS. Now, friends, There are two ways of using IFRS. You remember I told you that out of 200 countries, 160 countries are using IFRS. So there are two methods of using IFRS. One is adoption. What is meant by adoption? Adoption means as it is, like taking others' baby as your baby. Simple. So adoption means as it is. Okay. Like Europe. Europe has adopted IFRS. Okay. When you look at HSBC Holdings, HSBC, HSBC Bank, HSBC Holdings PLC. When you look at the HSBC Holdings PLC annual report, right? HSBC Bank's annual report. Since this bank is listed in London, okay, London Stock Exchange. So when you go to the basis of preparation part, they will write like the financial statement of HSBC Holding PLC has been prepared as per International Financial Reporting Standard as issued by International Accounting Standard Board and as adopted by, as approved, as issued by International Accounting Standard Board and as adopted by European Union and European Financial Reporting Advisory Group. So they write that we, the European company, are preparing our financial statement on the basis of IFRS. Which IFRS? Which is issued by IASB and adopted by us. Like Middle East, when you look at the Emirates Airlines annual report. So they are preparing their financial statement as per IFRS, right? So friends, Europe is the second largest continent in the world which has adopted IFRS, right? Earlier there were UK gap, there were so many gaps, right? But now they are on IFRS since 2005. Okay. So this is the meaning of adoption. Like Pakistan has adopted IFRS. So this is one of the mode by which the countries are using IFRS, adopting as it is. Okay. And that is why they are only calling it as a IFRS. But in India, Singapore, Malaysia, they are not calling it as a IFRS. Why? Because they have converged to IFRS. And what is meant by convergence and why convergence route is there? Convergence does not mean that you have done a lot of changes to IFRS. Convergence means you are using IFRS as it is, but at some places you have done some changes which is required by your jurisdiction, which is required by your economy, right? Like India. So what India has done, India has, so ICAI guys called to London, IASB, and they have asked for word file of IFRS. Why word file? So that they can do some changes. So friends, when they got the word files, they started doing the modification. And why the modification? Just because of the requirement of Indian economy. Okay. In India, we were already following accounting standard, right? And now we have to move from accounting standard to IFRS. So at some places, we found that it is not good to, adopt IFRS, or it is not good to adopt the accounting treatment as it is, which is given under IFRS in our Indian jurisdiction, right? So we have invited comments, we have invited responses from different regulators like SEBI, MCA, IRDA, RBI. So we found that at few places, some minimal changes is required. And the moment we are doing the changes, we cannot call it as adoption. We are calling it as convergence. Like Singapore is calling it like SGFRS, not IFRS. Malaysia is calling as MFRS, not IFRS. Why? Because they have converged to IFRS. Bhutan is calling as BFRS, not IFRS. Why? They have also converged. Okay. So friends, in the Ind AS, in the IFRS literature, we have done some changes. And the changes we call in three manner: carve out, carve in, and removal of option, right? Carve out, carve in, and removal of options. And friends, let me tell you, few of you are thinking that, sir, if we have to, move to IFRS, then why we have done some changes? Friends, first of all, I am not talking about the entire changes in IFRS. I am talking about only the small changes, 0.3%. 99.7% it is a cut, copy, paste of IFRS. Can you think of when you round off 99.7%, it is coming like 100% only, right? I am talking about 99.7% marks which you are getting, right? So substantially and significantly, we have adopted IFRS, but at few places we have done some changes. That is why we cannot call it as a IFRS as per the agreement between India and London, IASC. Okay, is that clear? So there are in the three ways we have done the changes. Number one, carve out. Number two, carve in. Number three, removal of option. What is meant by carve out? So I'll discuss one by one. Okay. And let me know if my Excel file is visible, friends. Please let me know if my Excel file is visible. Is it visible now? Okay. Is that clear? Yes. First of all, I'm talking about carve out. What is meant by carve out? Carve out means we have applied a different treatment in Indian accounting standard. We have applied a different treatment in Indian accounting standard at few places. Okay. So in the entire framework, only 7 or 8 carve out is there in the entire Ind AS standard. What does it mean? It means at 7 or 8 places, we have adopted a different accounting treatment. That's all. Okay. So for example, I am talking about Ind AS 1 and Ind AS 10. Right? Ind AS 1, we will be taking in the next class. So when I'm talking about the first standard Ind AS 1, which talks about presentation of financial statement, right? So friends, in IFRS, the standard is IAS 1 and IAS 10. So let's say the reporting date is 31st March 22. I am talking about one example of carve out. The company has taken a long-term loan on 15th November 2021 for a period of 5 years. So the company has taken a loan on 15th November 2021, and that loan is going to be repaid after 5 years. Means what is the maturity date of this loan? 15th November 2026. Okay. So friends, what is the classification in IFRS? Is it a current liability or is it a non-current liability? Is it a current or non-current? On 31st March 22, it is non-current, of course. What is the classification in Ind AS? In Ind AS, of course, it is a non-current. Even in accounting standard, it is non-current, right? Non-current होगा ना? On 31st March 22, still the remaining outstanding period is close to 4 years and 7 months, close to. So it is non-current liability. It's now what happened on the reporting date. On the reporting date, the company has made a violation of loan covenants. What is meant by loan covenants? Loan covenants means the terms and condition of the loan. For example, whenever you are taking a loan from bank, you are signing some loan agreement. In the loan agreement, some terms and conditions will be there, right? For example, if you are taking a loan for your plant and machinery, so you have to utilize this proceeds or money only for the acquisition of plant and machinery. If you will utilize this money for some other purposes, there is a default in the loan terms and condition, right? So loan terms and condition is known as loan covenants. Okay. So the company has made a violation. They have breached the condition of the loan agreement. And due to this, the loan becomes repayable on demand. So friends, in this case, now you need to tell me whether it should be non-current or it should be current. Whether it should be non-current or it should be current. What is the classification of this loan? You're right. This will become current. Why? Because the loan has become repayable on demand. It will become current liability in Ind AS as well as in IFRS, even in accounting standard. Very simple. So earlier the loan was non-current liability. Now when the company has made a default or breached the loan terms and condition, and when it becomes repayable on demand, it becomes current liability, right? On the reporting date, 31st March 2022. Now friends, what happened? Now what happened? The financials, and you understand you all are CA final students, and I'm sure that you guys have started your articleship. You know that for companies, let's say their reporting date is 31st March, but are they publishing or are they finalizing their balance sheet on 31st March? Answer is no. Their numbers are going to be approved in the board meeting, right? Which always happened after the reporting date. For example, if the reporting date is 31st March, their board meeting date will be, let's say, 15th April or 15th May. Their board meeting date will be 15th May. So friends, in this case, the financials are going to be approved or adopted in the board meeting, right? Scheduled on 15th May 2022, right? In the month of April, the management talked with the bank, and bank agreed to waive the violation and will not demand the payment immediately and will go by the old terms. So friends, when the company has made a default on reporting date 31st March, so prior to approval of the financial statement on 15th May 2022 board meeting, the bank, the management of the company has discussed with the bank, and bank agreed that okay, I'll not demand payment right now and I'll go by the old terms, means I will demand payment on 31st March 26 only, right? So friends, what is your view now? On the reporting date, there was a default. Subsequently, the company has made good the default, means the company has discussed with the bank, okay, and the bank has agreed not to demand the payment. So it means the situation becomes same, which was earlier. The situation becomes same, which was earlier. So friends, what is your view? And you know, the numbers goes public only after approval in the board meeting. You are aware, right? So you have heard about the concept of adjusting event, non-adjusting event, subsequent event. Have you heard about that? AS4, Accounting Standard 4. So likewise, we have Ind AS 10, events occurring after balance sheet date. So friends, what is your view here? Whether it should be current liability or it should be non-current liability. Friends, in IFRS says that it should be non-adjusting event. IFRS says it should be non-adjusting event, and we will show this liability as current liability. But friends, we have deliberated on this and we said we are a Indian company. In India, India is a developing country, and in India, if I talk about this loan terms and condition, there are a lot of different terms and condition when you take a loan, like filing of debtor statement, stock statement, creditor statement, net worth certificate, financial statement. So we told that we agree with your view. If the loan is repayable on demand, we will show it as a current liability. But before approval of the financial statement, if the company has made good the default, right, in that case, we will consider this event as an adjusting event, and we will show this liability as a non-current liability, right? Non-current liability. Why? Because in the next year, what you will do? In the next year, what you will do? In the next year, of course, it is a non-current liability, na? Still in the next year, the outstanding period will be 3 years and 7 months, right? So we said that, see, we understand that the default was happened on the reporting date, but it has made good before approval of the financial statement. So we will only show a disclosure. We will give the disclosure in the notes to accounts, but we will not change our position. We will not change our position, and we will show this liability. Will continue to show this liability as a non-current liability. In IFRS, we are all saying that we will show it as a current liability. So I also don't found this logical, right? Where actually the liability has to be repaid after 4 years and 7 months, but we are showing as a current liability with a disclosure in the notes to account. So this is the change in the accounting treatment we have done for the default in long-term liability, default in loan covenants. Is that clear, friend? Is that clear? Yeah. I hope it is clear. You are right, Vimal. In IFRS, it is reflected as current, but this liability will not be paid in the next 4 years and 7 months. So that is why in Ind AS, we have taken the same treatment which we were following in accounting standard 4 and logical also, right? Okay, friends. So the first kind of difference is known as a carve out, right? Carve out means applying a different treatment in Ind AS. Is that clear? There are 7 or 8 carve outs in entire Indian accounting standard framework. I hope it is clear. Very good. Let's go to the second kind of a difference, which is Carve In. What is meant by Carve In? Friend, Carve In means putting additional guidance in Ind AS. Putting additional guidance in Ind AS. And friends, there is only one Carve In. There is only one Carve In is there. One Carve In. Okay? Friends, globally, there is a standard known as IFRS 3. IFRS 3 is on business combination. Business combination means merger, acquisition, amalgamation. You remember you have AS 14, accounting standard 14, which talks about amalgamation, accounting for amalgamation, which talks about your pooling of interest method, which talks about purchase method, right? So likewise, AS 14, we have IFRS 3 on the business combination globally. In India, we have Ind AS 103 on business combination. Business combination is a very fancy name which includes your amalgamation, merger, acquisition. Okay. So friends, IFRS concept says that all the amalgamation, merger, acquisition has to be accounted for on the basis of fair value method. Right. For example, if A Limited is acquiring B Limited, so B Limited net asset has to be measured at fair value. Okay. B Limited and whatever purchase consideration A Limited is paying, it has to be measured at fair value. So fair value concept is there in IFRS. Likewise, we have also adopted the fair value concept for all the merger and acquisitions. But one guidance we have inserted additionally. And what is the guidance? We told that in case of common control transaction, what is meant by common control transaction, friends? Common control transaction means, for example, A Limited. A Limited is a holding company. A Limited is a holding company. A Limited is holding, or let's say parent company of B Limited. Right? Means B Limited is a subsidiary of A Limited. Right? And A Limited is also a parent company of C Limited. A Limited has two subsidiaries, B Limited and C Limited. Now this C Limited has a Limited is a parent company. C Limited is parent company of D Limited, right? And now B Limited acquired D Limited. So friends, A Limited is the company, first company. A Limited has two subsidiaries, B and C. And C has a further subsidiary known as D. Now this D is acquired by B. Okay. So friends, if I talk about this, the relationship between B, C and D, earlier C was the father of D, right? Now when B acquired D, B Limited acquired D Limited, B becomes father of D and C becomes uncle of D. Is that clear? Is that clear? Yeah. And in that case, what happened? So father becomes uncle now. But whether grandfather has changed, ultimate parent company has changed. Even for D Limited, although when D Limited was subsidiary of C, the grandfather was A only. When D becomes subsidiary of B, the grandfather is A only, right? So the ultimate controlling entity has not been changed. The ultimate controlling entity has not been changed. Means grandfather has not been changed, father has been changed. So this kind of transaction is known as a common control transaction. We said that in India, we were not following fair value method earlier. We were following book value method or pooling of interest method. So we said that if we will apply this fair value method to all the entities, what will happen? Probably, the group companies, the big groups will start playing with the numbers. And how they will start playing with the number? They will acquire their group entities, right? Because they have the control, like A Limited has the control on B, C, and D, right? So they can structure the transaction, okay? And what they will do? They will acquire the group companies internally and they will restate their valuations. So we said that in case of common control transaction, we will apply pooling of interest method. This pooling of interest method is not there in IFRS. So we have inserted additional guidance in our Indian accounting standard. And that is why we are calling it as Carve In. Carve out means applying different treatment. Carve in means putting the additional guidance. So this is known as Carve In. Is that clear? Is that clear? I hope it is clear. Tanisha, I haven't understood your query. Rajiv is asking in case of the carve out, like long-term loan covenants, what will happen in this case to next year for IFRS? In next year, in IFRS, they will show it as a non-current liability only because still 3 years and 7 months has to go, right? Tanisha, I haven't understood your query. Why can't be? I hope it is clear. Shall I move forward? We have 7 or 8 kind of carve out and we have one carve in. And friends, now we'll talk about the removal of option. The third one is removal of option. Okay, removal of option. You remember? I have talked about removal of option also. What is removal of option? Removal of option means removing the choice. For example, in IFRS standard, at some places, 2 or 3 places, there were choice. Either you can use this or you can use this. In Ind AS, we have removed the choice. In Ind AS, we have removed the choice. Right. Again, in the first standard, right? Ind AS 1, right? In IFRS, it is IAS 1 on the presentation of financial statement. And in profit and loss account, IFRS says that the expenses can be classified by the function or by nature method. The expense classified by function or by nature method. What is meant by function or by nature method? In Ind AS, we have removed the choice of function or nature, and we have said that the expense in the profit and loss account has to be classified only by the nature method. Now I will tell you what is meant by function or nature method. Friends, for example, let's say the company has a factory building and the company has a office building, right? There is a company and the company has one factory building and one office building. So friends, the company has a depreciation on the factory building worth 200 lakhs and the company has a depreciation on office building for rupees 100 lakhs, right? So how we are showing this entire depreciation in our P&L account right now? We are showing as a separate line item depreciation expenses or depreciation and amortization expenses 300 lakhs, right? This is how we are showing in the P&L. I'm sure that you will agree with me. In the profit and loss account, we are showing the depreciation as a separate line item and we are showing this as a 300 lakhs total. Going by the functional classification, what will happen? Function says that you can you can allocate your expenses or you can show your expenses on the basis of function. For example, the depreciation on office building will be presented like a office overheads. The depreciation on factory building will be shown like a factory overheads, right? So we are showing the expenses by function. It is like a MIS, right? It is like a MIS based. Okay. So we are showing the expenses on the basis of function, not by the nature. But the nature based classification says that whatever depreciation is to, has been there, doesn't matter. It is on factory, it is on office, doesn't matter. You have to show the expense by the nature, and by the nature, it is a depreciation in the nature. So you have to show the depreciation expense as a whole. Is that clear? In IFRS, both the methods are allowed. The functional classification are allowed as well as nature-based classification are allowed. But we have removed the choice of function and we have said that no, we will only show the nature method classification of expenses. Why? Because in our earlier accounting standard in Schedule 3, only nature-based classification was allowed. And to maintain the consistency between the various entities in India, we have said that we will only follow the nature-based classification of expenses in the P&L while presentation. Is that clear? Is that clear, friend? I hope it is clear to all of you. Have you understood the meaning of carve out, carve in, and removal of option? I have given one example for each item. Sir, you have told that 7-8 carve outs will be there. What are the other 6 carve out, friends? The other 6 carve outs are in the respective standard. So the faculty who will take those Ind AS, they will tell you, right? They will tell you the difference between IFRS and Ind AS, and they will tell you the carve out in the respective standard. Like when the faculty will teach you Ind AS 103 on business combination, they will also cover this Carve In as well. They will also cover. I have only covered from the perspective of giving you a thought that how this IFRS has been converted to Ind AS in India, right? I'm again moving back to my PowerPoint presentation, and I hope now you guys have understood that how we have converged to Ind AS from IFRS in terms of carve out, carve in, and removal of options, right? So we have done 3 kind of changes, and it's a very small changes, not a big changes, right? Friends, India has converged to IFRS. India has converged to IFRS. India has not adopted IFRS like Pakistan, like Europe, like Middle East. India has not adopted. India has converged. So friends, we are moving from AS to Ind AS. And why we are moving? Of course, we are moving towards global approach, right? As our Ind AS are substantially equivalent to IFRS. These Ind AS standards are more towards fair value approach rather than historical cost approach. Our accounting standard are based on historical cost approach. But if I talk about out of 39 Ind AS, close to 15 Ind AS uses the fair value method, uses the fair value approach, right? So we are more on the real life, we are more on the real time approach rather than historical approach in terms of Ind AS and IFRS. Reporting versus accounting, friend. If I talk about the disclosure requirement, IFRS and Ind AS have a very robust kind of disclosure requirement, right? There are huge disclosure in the notes to accounts, and I can tell you one thing. For example, if you are preparing a financial statement of a company on accounting standard, probably the size of the financial statement is 50 pages. But same company, same year, if they will prepare on the basis of Ind AS or IFRS, it from 50 pages, it will become 75 pages. Why? Because there are huge disclosure requirement which is there in Ind AS in comparison to accounting standard. Substance over form. Although this is not a new concept, substance over form is not a new concept. But friend, if I talk about this concept of substance over form, I can say that this concept is very well designed in IFRS and Ind AS, right? Why? Friends, I'll give you one example here, right? You all have understood about preference share capital. You have understood the meaning of preference share capital, which is given a preference in redemption, which is having a fixed money of redemption, fixed amount of redemption. Okay. And you understand the meaning of share capital also. Share capital is a residual thing. Okay. For example, if the company is getting liquidated or wind up, so equity shareholders will be getting the amount at the end of, after paying everyone. If something is left, then that residual has to be given to the equity shareholder. Friends, the preference share has to be shown as a share capital in our accounting standard. Do you think if something which has to be settled in actual, settled in a predetermined amount, is it a capital? This is not a capital. Going by the form, it is a capital, but going by the substance, it is a liability. And friends, that is why redeemable preference share capital has been considered as a liability in Ind AS and IFRS, and it was considered as a capital in accounting standard. Is that clear? So friends, going by the substance over form, this preference share capital is a liability, not a equity. Okay. So friends, if I talk about consolidation standard, leases standard, revenue standard, financial instrument standard, you will realize that the concept in these standard are on the basis of substance rather than form, right? So this substance over form is very well inculcated into the IFRS or Ind AS standard. These IFRS or Ind AS standard are very much principle based standard rather than rule based standard. Okay. So this is just, I want to tell you, this is just an informative slide, nothing related to exam, but of course, from the concept understanding perspective, important slide. What is Ind AS? It's an Indianized version of IFRS applicable to India. Why? Because we want to be par with the global requirement, global countries. So since this IFRS is used in more than 160 countries across the globe by way of adoption and convergence, and that is why we have also adopted Ind AS as a converged IFRS. One language will enhance comparability understanding of one set of books. Easy access to global capital market, which will attract foreign investment and low cost of capital. So these are the benefits of adopting IFRS, means either adopting IFRS or converging IFRS, right? And this standard, due to the disclosure requirement, more transparent and more visible. Right, friends? Now, the most important part. We have discussed first IFRS, right? You remember the history of IFRS? 1973 to 2001, IASC, IAS. Then from 2001, it is IASB, and they have started issuing IFRS standard in the title of IFRS. You remember that? Then we talked about adoption, convergence, carve out, carve in, removal of option, right? So we talked about the IFRS history. Now we are coming on the Ind AS literature, that how we have drafted. And our ICAI has played a very important role in drafting these standards, right? Vimal is asking, can we have the list of carve outs and removal of option? Yes, Vimal, it is there in your study material as well. Okay, it is there. Mr. Alok Tiwari is saying, can you provide the worksheet, sir? Yes, I will be sharing this worksheet with the ICAI and they will upload. Okay. Yes, friends, let me talk about this literature. So friends, first of all, globally, there are two titles, IAS and IFRS, right? There are two different names, International Accounting Standard and International Financial Reporting Standard. So friends, these International Accounting Standard are issued by IASC and revised by IASB, and they have IAS 1 to IAS 41. So they have IAS 1 to IAS 41, but the standards are 24 only. So friends, for IAS standard, we have also issued Ind AS 1 to Ind AS 41 in the continuity, right? In the continuity. Is that clear? For IAS series of standard, IAS 1 to IAS 41, we have also issued Ind AS 1 to Ind AS 41. For IFRS series of standard, which have been issued by IASB after 2001, since in India we have maintained only one title, which is Ind AS, So we have already issued Ind AS 1 standard. So for IFRS 1, we cannot issue again Ind AS 1. So for IFRS series of standard, we have started with 100 plus 1. Right? For example, for IAS 1, we have started Ind AS 1. We have drafted Ind AS 1. For IFRS 1, we have started with Ind AS 100 plus 1. For IFRS 2, Ind AS 100 plus 2 means 102. IFRS 3, Ind AS 100 plus 3. You understand? So for IFRS 16, Ind AS 100 plus 16, 116. Okay. So friends, for IFRS series of standard, we have started with 100 plus series. For IAS series of standard, we have started with Ind AS series, Ind AS 1, right? And we have done a very wonderful job here for IFRIC interpretation and SIC interpretations, right? And these are the separate guidance. In globally, these are the separate guidance. But in India, what we did, we have inserted these guidance in the form of appendix. So when you open the standard, right? First of all, you will find the standard like Ind AS 16, property, plant and equipment. You will find the standard first. Then you will find the alphabetical appendix like Appendix A, right? So what are those appendix? In the appendix, we have inserted IFRIC interpretation and SIC interpretations. We have inserted the interpretations in the form of appendix, right? We have inserted the interpretations in the form of appendix. Is that clear? Is that clear, friends? So that you will get the entire material at one place relating to the particular topic. Now, if it is not clear to you, I have my Excel file, which will, make it very clear to all of you. Let me show you the sheet. I hope this Excel file is visible. I hope this Excel file is visible, guys. Okay. And you can see that I have told you for all the IAS series of standard, we have started with Ind AS. For example, IAS 1 is there, IAS 2 is there. We have also drafted Ind AS 1, Ind AS 2. IAS 3, 4, 5, 6 is not there. Friends, IAS 3, 4, 5, 6 is not there. Where these standard have gone? They have replaced by IFRS series of standard. They have replaced by IFRS series of standard, right? By IASB after 2001. So friends, we have not notified Ind AS 3, 4, 5, 6. So probably if you are a new learner in Ind AS and when you will look at the Ind AS series, so if you will not found Ind AS 3, 4, 5, 6, don't get surprised. We have maintained the same sequence, right? And that is why we have not drafted, we have not notified Ind AS 3, 4, 5, 6. Like IAS 7, 8 is there, we have also notified Ind AS 7, 8. IAS 9 is not there. Why it is not there? Because it is deleted and moved to IFRS series of standard. And that is why we have also not notified Ind AS 9. IAS 10 is there. We have also notified Ind AS 10. IAS 11 is not there. We have not notified Ind AS 11. 12 is there. We have notified Ind AS 12. IAS 13, 14, 15 is not there. And we have also not notified Ind AS 13, 14, 15. Right? I hope you have understood now. You have understood now. Is that clear? Is that clear, friends? Is it clear or not clear? You can see that wherever IFRS standards are there, there only we have, drafted our Ind AS standard. Is that clear? We have maintained the same sequence, same numbering. After looking at this Excel file, you got more confidence. Yeah. But let me tell you, on this IFRS series of standard, you can see that this IFRS 1 to IFRS 16, all the standards are there, and we have also notified Ind AS 100 plus 1 to Ind AS 100 plus 16. All these standard we have notified, right? Because these standards are effective and live. These standards are effective, and that is why we have all the Ind AS standard here. In total, if I talk about this Ind AS standard, first of all, main standard is there like Ind AS 16. Okay. Globally, it is IAS 16. Then friends, in India, there is appendix A, right? And what is this appendix A? This appendix A is nothing but the IFRIC or SIC, SIC interpretation. Then friends, you have a, after alphabetical appendix, you have a numerical appendix, appendix 1, Roman 1. In appendix Roman 1, we have given the difference between IFRS standard and Ind AS standard. That particular IFRS and Ind AS standard, we have given the difference. Okay. Hence, if I talk about the construct of Ind AS, right? If I compare with our old accounting standard, one I want to tell you. When you read our old accounting standard at various places, the word used is may or should. May or should. But in Ind AS, at more than 90% places, the word used is shall. What is the difference between may, should, and shall? May, should means optional. Shall means mandatory. So you have to be, since you are, now you will be gaining expert knowledge, and 1 year down the line or 6 months down the line, you will become a chartered accountant, right? So you have to be expert in terms of reading the standard. So when the word may or should has been used, you can say that it is a choice. But when the word shall has been used, it means it is a mandatory. So friends, Ind AS standards are mandatory. Accounting standards are not mandatory, they are optional. Okay. So accounting standards are not mandatory means the wherever in the paragraph the may or should has been used, it is optional. But in Ind AS, largely the construct is like they have everywhere they have used the word shall. So it means all the compliance of Ind AS standards are mandatory in nature. Yes. Nisha, I'll share the Excel sheet also. First, I'll show you the Excel sheet because I'll write a lot of things on Excel sheet. So this I will share after the class. Okay. I hope you guys have understood this very well, right? Let me again go back to my PowerPoint presentation. So now you guys are well versed with this Ind AS literature. You understood that how this literature has been drafted. And friends, in the PowerPoint presentation, you can see that I have just given you the number of Ind AS standard, name of Ind AS standard, then your IFRS standard and the counterpart accounting standard. So that you will understand that, okay, this standard is parallel to which accounting standard, right? So this is just for your reference. Okay. Uh, as I can say that in accounting standard, how many accounting standards are there? How many AS are there? There are 27 AS, right? There are 27 accounting standards are there, 27. And how many Ind AS are there? How many Ind AS are there? There are 39 Ind AS. So you can see that there are 12 more standards in comparison to accounting standard. And friends, that is why a lot of new guidance, a lot of new standards are there in Ind AS. For example, India is an agriculture based economy, but we don't have any standard on agriculture. But now in Ind AS, we have a standard on agriculture accounting. If I talk about stock options, share based payment, we don't have any standard on share based payment. We have a guidance note. But in Ind AS, we have a separate standard on share based payment. We don't have any standard on hyperinflationary economy. For example, if a company which is operating in Zimbabwe, Ghana, Venezuela, then these economies are hyperinflationary. So now we have a standard on hyperinflationary economies also. So you can see that these standards came from IFRS only, right? Is that clear? So on financial instrument, friends, we don't have any standard in AS. AS 30, 31, 32, Rahul, was never become mandatory. It was recommendatory, right? So for financial instrument, we have three standard: Ind AS 32, Ind AS 107, and Ind AS 109, right? These are very detailed standard, and you will have a lot of classes on financial instrument standard, right? Around 10 to 12 classes will be there on financial instruments. Is that clear, friends? Is that clear? I hope it is clear to all of you. Let me know if you have any doubt so far. So we have completed overview and introduction to Ind AS. Now we will be moving to applicability of Ind AS, right? So first part we have covered. Second part we are moving on. So Rajiv is saying yellow highlighted have blank in Ind AS. So Rajiv, there are 40 IFRS standard, 39 Ind AS and 27 AS. So there is one standard, right? So let me show you. There is one standard, yellow highlighted. There is one standard Ind AS, IAS 26. This IAS 26, we have not notified the counterpart standard in Ind AS. Why? Globally, IFRS is applicable to corporate, I mean to say company, as well as non-corporate entities like trust as well. In India, Ind AS is only applicable to corporate, only applicable to companies, that I am covering in the next part. Right? Ind AS is only applicable to the companies. When I'm talking about India, Ind AS is not applicable to non-corporate entities like trust. So this IAS 26 is applicable to the trust which are maintaining the retirement benefit plans, right? For example, you have created a trust and trust is maintaining your pension fund. Trust is maintaining your gratuity fund. So in the IFRS is applicable to this trust also globally, but in India, Ind AS is not applicable to trust. That is why we have not notified Ind AS 26. Although IAS 26 is there, but Ind AS 26 is not there. If I talk about 24 IAS, in place of 24 IAS, we have notified 23 Ind AS, right? There are 16 IFRS. In place of 16 IFRS, we have notified 16 Ind AS. Okay? There are total 40 standard, 40 global standard, 40 IFRS standard are there. When I say 40 IFRS, means 40 IFRS and IAS standard are there. But in India, we have issued 39 Ind AS, right? Is that clear? I hope it is clear to all of you. And I hope you guys have enjoyed the first part. Now I'll give you a 5 minutes break. It's 8:21 now. I'll start at 8:27, right? Let's have a 5 minutes break. we have covered overview of Ind AS, overview of IFRS, right? And introduction to Ind AS. Now we are going to cover applicability of Ind AS and why it is important to understand. Let me tell you. Friends, in India, we have two set of standard. One is accounting standard, one is Indian accounting standard. So the first question, probably I'm not only talking about exam, probably when you appear for an interview, the interviewer may ask that on my company where you are there for giving an interview, why AS is applicable, why not Ind AS is applicable, or why Ind AS is applicable, why not AS is applicable. So it is important to understand which standard is applicable to which set of entities. Number one, from interview perspective. Number two, you are doing your articleship, right? And your principal or your boss has sent you on some audit and you are reviewing the financial statement. Until and unless you will not be aware about the applicability criteria, how will you check the compliances? How will you ensure that this company has done a right thing and this company has, applied accounting standard or applied Ind AS? So this company has done the right thing in terms of applicability until and unless you are not sure about the applicability, right? So number three, from the, and this applicability is not very much from the examination perspective, but of course, yes, there could be a tricky question which may be asked in the examination, right? So friends, you should be aware about the applicability of Ind AS to the Indian jurisdiction, okay, to the Indian companies, right? Let's move on. If I talk about this Indian jurisdiction, if I talk about this applicability of Ind AS, friends, our accounting standards are issued by MCA, right? Our accounting standards are also, notified by Ministry of Corporate Affairs. You understand that? ICAI prepare or draft accounting standard. They send to NAFRA, which is NFRA. They approve those accounting standard and then they issue to MCA, and MCA notify the accounting standard and then they become the law, right? Likewise for Ind AS, Institute ICAI draft Ind AS, they send to NAFRA, NAFRA approve Ind AS, they send to MCA. When MCA notify those Ind AS, then it becomes the law. Is that clear? Friends, accounting standard, old accounting standard have been notified by Companies AS Rules 2021, right? And which is under Ministry of Corporate Affairs. MCA has notified Companies AS Rules 2021 for accounting standard, right? Earlier it was Companies AS Rule 2006. Now it is replaced by 2021. Friends, if I talk about Ind AS are also notified by MCA. Ind AS are also notified by MCA, right? And MCA had notified Ind AS, 39 Ind AS on 16 February 2015. So MCA had notified Ind AS, how much Ind AS, how many Ind AS? 39 Indian accounting standard on 16 February 2015 notification date, right? So wide MCA notification dated 16 February 2015, 39 Ind AS were notified by Ministry of Corporate Affairs. On the same date, right? This is the key date. This is the first date where Ind AS becomes a reality for India, right? On 16 February 2015, MCA had notified 39 Ind AS and MCA had also notified the applicability roadmap. MCA has also given the applicability roadmap for Ind AS to the Indian companies, right? And these Ind AS had been notified by Ministry of Corporate Affairs by way of Companies Ind AS Rules 2015, right? Like accounting standard were notified under Companies AS Rules 2021, Ind AS were notified under Companies Ind AS Rules 2015. You understand this? Okay. Now, friends, if I talk about applicability, right? Ministry of Corporate Affairs has come up with two notifications on applicability. Number one, 16 February 2015. Number two, 30th March 2016. There are two notifications. The first notification takes care of companies except NBFC company. In 16 February 2015 notification for Indian companies, the roadmap for applicability of Ind AS were notified. And when I'm talking about Indian companies, it is excluding NBFC companies, right? And when I'm talking about companies, companies means the companies which have been incorporated under Companies Act 1956, old wala Companies Act, or Companies Act 2013. Sir, whether it includes government company, answer is yes. ONGC, Indian Oil Corporation, right? Steel Authority of India Limited, MMTC Limited. What is this? These are the government companies. These are the PSU. But these companies have been incorporated under Companies Act, right? So whether on these companies Ind AS is applicable, answer is yes. Okay. So friends, sir, what about electricity company? What is electricity company? Their business is to provide electricity, but these are companies, right? So whether these are under the ambit of Ind AS, answer is yes. Okay. So the word use is companies. Okay. The word use is companies. Understood? So on 16 February 2015 notification, MCA has notified the applicability roadmap for companies, Indian companies, okay, except NBFC companies. After 1 year, that is on 30th March 2016, MCA has also notified the roadmap for applicability of Ind AS to NBFC companies. Okay, guys. So let's discuss this roadmap for applicability of Ind AS. Let's discuss this. Right. Friends, first of all, as I told you, Ind AS were notified in 16 February 2015, means 14-15 is the financial year. Okay. So friends, the first year of mandatory applicability, the first year of optional applicability was 15-16. But the first year of mandatory applicability was 16-17. Okay. So in India, the first mandatory year for applicability of Ind AS was 2016-17. And at that point of time, government has given that if any company who wants to apply it voluntarily 1 year before, they can do that. Because this Ind AS were notified in February 2015. So anyone who wants to apply in 15-16, they can do that. Right. But it was not mandatory. From 1st April 2016, there was a mandatory roadmap for applicability of Ind AS. If I talk about today it's been 8 years. Today it's been 8 years when Ind AS were notified, right? Ind AS were notified. It's been 8 years now. So I'll take you to my Excel file and there I will explain you the applicability of Ind AS to Indian companies. Please let me know if my Excel file is visible, friends. Please let me know if my Excel file is visible. That visible? Okay. Yeah. So friends, let's talk about today, September 25, 2023. What is the applicability of Ind AS to Indian companies? As I told you, for applicability, there were two notifications, 16 February 2015 notification, right? And 30th March 2016 notification, right? These were the notifications. First of all, I'll talk about 2015. And I would request each one of you, please be ready with your pen and paper and please write down the important points, okay? Friends, Ind AS is applicable to all listed companies except SME listed companies, First of all, sir, from the applicability perspective, the companies have been divided into two parts, listed companies, unlisted companies, right? Listed company, you understand, which is listed in India or outside India, let's say, right? Sir, If a company is listed in NSC, BSC, right, or in London Stock Exchange, like Reliance is listed in London Stock Exchange also, okay. Infosys is listed in NASDAQ, which is US based stock exchange. So, sir, Ind AS is, so these are the listed companies, right? Whether Ind AS is applicable on this company, answer is yes. Number one, any company which is listed in India or outside India. I am only talking about Indian company. If you will ask, sir, whether Ind AS is applicable to Facebook, answer is no. Why? Whether Facebook is an Indian company, answer is no. Whether Facebook has been incorporated under Companies Act, answer is no. Right? So it doesn't matter if it is listed outside India, but it is a company which is incorporated outside India as well. We are talking about company which has been incorporated into India or enlisted outside India, right? So first of all, when I'm talking about Ind AS, I'm only talking about Indian companies. When I'm talking about listing, I'm talking about listing in India or outside India. For example, Renew Power Limited. Renew Power Limited is an Indian company, but it has listed outside India. Whether Ind AS is applicable, answer is yes. So friends, number one, Ind AS is applicable to all listed companies. Number one, whether it is listed in India or it is listed outside India. That is number one. Number two, listed company means equity listed company as well as debt listed company. If equity is not listed, only debt is listed, then also Ind AS is applicable. Number three, Ind AS is applicable to the companies also who are in the process of listing. For example, you remember that last year, Paytm comes with their IPO, Delivery comes with their IPO, Zomato comes with their IPO, right? So friends, when they were in the process of listing, right? When they were in the process of listing means when they are coming with a red herring prospectus or their prospectus, right? So in the prospectus, you can see their financial statement have been restated on the basis of Ind AS. So even the companies does not get listed, but even if they are in the process of listing, Ind AS is applicable to them, right? Is that clear? Sir, whether listed entity includes all the entity, government entity, means government company, electricity company, whatever. For example, IRFC Limited, let's say, RVNL Limited, right? IRCTC Limited, listed company, which is into catering of railways, right? Ind AS is applicable, yes. So we understood that Ind AS is applicable to all listed companies, which is listed in India or listed outside India. Number two, sir, is there any exception to it? Yes, there is one exception. Friends, you understand that government is promoting small and medium enterprises, SME companies, right? And for that, there is a separate listing platform for SME listed companies, which is, and I can tell you the name also, in NSC, National Stock Exchange, there is a separate listing platform for SME entities, which is known as NSC Emerge. NSE Emerge. This NSC Emerge is the SME listing platform of NSC, National Stock Exchange, right? This National Stock Exchange, NSC, is a platform for big companies, right? And NSC Emerge is the platform for SME entity. So if the entity is a SME listed entity, then Ind AS is not applicable mandatorily. But if they want to apply voluntarily, they can apply. But mandatorily, it is not applicable. Is that clear? I hope the first part is clear to all of you. All listed company Ind AS applicable, only one exception, which is SME entity, right? Which is SME entity. I hope this is clear. Number two, sir, you told that, listed these entities have been bifurcated in two parts, listed companies and unlisted companies. Listed and unlisted companies. Sir, what about unlisted companies? Ind AS is applicable on unlisted companies if net worth is equal to or more than 250 crores. Oh, it means if a company is unlisted, then we need to check the net worth. But if the company is listed, then we are not required to check anything. Only SME. SME is there, then Ind AS is not applicable. Is that clear, friends? Is that clear? So for listed entity, Ind AS will be applicable irrespective of the fact even their net worth is negative. But for unlisted companies, Ind AS will be applicable only when their net worth is equal to or more than 250 crores. I hope it is clear to all of you. Yes, friends? Very good. Now, sir, for example, Reliance is a big group, Reliance Industries Limited. They have a lot of entities. When I read Reliance annual report, the 15-20 pages belongs to the related party disclosures. So they are big company. So if Ind AS Reliance is a listed entity, and I'm sure that there are so many small entities which are subsidiary, associate, or joint venture of Reliance. Sir, what about those entities? In the same group, one company will prepare Ind AS and other will prepare accounting standard accounts. Answer is no. Friends, that is why in the notification it was said that if Ind AS is applicable to one company, then it will be applicable to the holding, subsidiary, associate, and joint venture of such company. For example, Reliance Industries Limited is a big company. It's a big listed entity. Of course, Ind AS is applicable. Reliance has a small subsidiary, right? Reliance has a small subsidiary. And this subsidiary is an unlisted subsidiary. Net worth is also 100 crore only. So friends, although this subsidiary's net worth is only 100 crore, it is an unlisted subsidiary, but by virtue of applicability of Ind AS to Reliance, it is automatically applicable to its subsidiary company as well. Is that clear? And it is good also, na? Because for the purpose of consolidation, Reliance is required to have the subsidiary Ind AS accounts, right? Right, na? So friends, that's why it said that if Ind AS is applicable to any company just because it is listed or it is unlisted but net worth is more than 250 crore, then Ind AS will automatically be applicable to its holding company, its subsidiary, associate, and joint venture, right? Its holding company, subsidiary company, associate company, and joint venture company, right? Is that clear? Is that clear? So, for example, Viraz. Viraz is a chartered accountant. Viraz went to an audit of a company, right? And management has prepared the financial statement under accounting standard. So when Viraj was looking at the page which is of share capital, Viraj found that the 70% promoter, the 70% holding belongs to a company who is a listed company. Then Viraj asked CFO that Mr. CFO, you are the subsidiary of a listed entity, right? He said, yes. Then Viraj told, in that case, you are not complying the requirement of Companies Act. Why? Because as per the notification dated 16 February 2015, if you are a subsidiary of a listed company, right, and that listed company applying Ind AS, so if you are a subsidiary of that listed entity, automatically you are supposed to apply Ind AS. That CFO is saying, but Mr. Viraj, we are the unlisted entity. Viraj saying, doesn't matter. And the CFO is saying, but our net worth is also less than 250 crore. Viraj is saying, doesn't matter. Since you are a subsidiary of that listed entity, and that is why Ind AS is automatically applicable to you. Again, second example. Then Tanisha went to the audit. Tanisha is also a chartered accountant. And when Tanisha was looking at the share capital page, Tanisha has found that this company has a promoter who has invested 30% in the entity, right? And that promoter is a listed entity. Then Tanisha has gone to the CFO and she asked, Mr. CFO, why you have prepared your financial statement under accounting standard? CFO said, madam, we are unlisted entity and we are having a net worth of less than 250 crore. Tanisha said, doesn't matter. but you are an associate of a company, of a listed company, or you are an associate of a company who is applying Ind AS. So CFO asked, okay, madam, but why Ind AS is applicable to me? Then Tanisha shows the notification. She told, since as per 16 February 2015 notification, if Ind AS is applicable to a company, then it will be automatically applicable to its subsidiary, joint venture, and associate. I hope this is clear to all of you guys. I hope this is clear to all of you guys. Yeah, very good. Yes, Gazar, irrespective of limits, it becomes Ind AS applicable, not IFRS applicable, right? Number third example, Krishna is also a chartered accountant, and Krishna to the audit of a company, right? So when Krishna was looking at the investment page, investment, right, of in the financial statement. That company is a private limited company, unlisted company. When Krishna was looking at the investment side, Krishna found that this company has done 70% investment. So basically, this company has done a huge investment in the listed company, right? And that listed company becomes the subsidiary of this private limited company. This listed company becomes the subsidiary of the private limited company. Then Krishna went to the CFO and said that, Mr. CFO, why you have applied accounting standard to your accounts? CFO said that we are an unlisted entity and our net worth is less than 30 crore. But then Krishna said, doesn't matter. Since you are a parent, you are a holding of a company where Ind AS is applicable. You are having a 70% share capital of a listed company, right? Okay. So this listed entity is a subsidiary of you. You are a parent of that listed entity. You are a holding of that listed entity. And since Ind AS is applicable on that listed entity, so because you are the holding, Ind AS is automatically applicable on you as well. Is that clear? Ind AS will be automatically applicable on you as well. Friends, I hope you guys are very much clear about these three examples which I have taken with all of you, right? So if Ind AS is applicable to a company, for example, this is a company, then it will be automatically applicable to its holding company. Upward and downward, it is applicable to the subsidiary, it is applicable to the JV, and it is applicable to the associate. Is that clear? So this is the company where Ind AS is applicable. So it will be automatically applicable to all these four kind of entities, right? Now I want to discuss with one important concept with all of you. Let's say if Ind AS is applicable to a subsidiary, for example, Ind AS is applicable to a subsidiary, whether it is applicable to the holding company or the parent company, whether it is applicable to the holding or parent company, answer is yes, because the word holding is covered now. If Ind AS is applicable to a joint venture, whether it is applicable to its venturer, and if Ind AS is applicable to a joint venture, whether it is applicable to its venturer, if Ind AS is applicable to an associate, whether it is applicable to the investor, you understand the relationship. For example, if there is a subsidiary, what is the other entity? Other entity is called as parent or holding. If there is a joint venture, the other entity is called as venturer. If there is an associate, the other entity is called as investor. You understand the relation now? If you will say that I am son of him, who is him? He is the father. If you will say that I am nephew of him, who is him? He will be the uncle. Right? If you are saying that अगर मैं son हूं तो वो father है, अगर मैं nephew हूं तो वो क्या है? Uncle है. You understand the relationship? Downward, upward? Yeah? Yeah? Is that clear? you, Pooja. Thank you for this wonderful feedback. Is that clear? Friends, so Ind AS is applicable to subsidiary, it is applicable to the parent also. Why? Because the parent is covered here, the holding company, right? The holding. The word holding is covered here on the. But the word venturer and investor is not covered. Uncle is not covered, only father is covered. What does it mean? It means if Ind AS is applicable to joint venture, it is not applicable to the venture. If Ind AS is applicable to associate, it is not applicable to the investor. I hope this is clear to all of you. Now let's say talk about the upstream entity. Let's say Ind AS is applicable to the holding or parent company. Whether it is applicable to the subsidiary. Yes, it is applicable to the subsidiary. Yes. If Ind AS is applicable to a company, it is applicable to the subsidiary, associate, joint venture. Downstream में तो सब पे apply हो जाएगा ना. If Ind AS is applicable to a venturer, this is applicable to uncle. Whether it is applicable to nephew. If Ind AS is applicable to a venturer, whether it is applicable to joint venture. Answer is yes. If Ind AS is applicable to investor, is it applicable to associate? Answer is yes. Why? लिखा है नोटिफिकेशन में, लिखा है if Ind AS is applicable to any company, it is automatically applicable to its subsidiary, its joint venture and its associate, right? So in the downside, all three are covered. तो नीचे की तरफ डाउनसाइड पे सबसी, एसोसिएट इन जेवी तीनों को कवर कर दिया, बट अपसाइड में ओनली होल्डिंग को कवर किया. I hope it is clear, friends. If it is not clear, please let me know. I'll explain it again. I'll come to that. You will be able to understand when I'll explain it. Right? Okay. Understood? I hope you guys have understood this part. Okay. Now what about the next notification, 30th March 2016? Same notification. It only talks about NBFC company like HDFC Limited, not bank. HDFC Limited, Bajaj Finance Limited, Bajaj Finserv Limited, right? So Sriram Transport and Finance Company Limited, Muthoot Fincorp Limited. So this is talking about NBFC companies. Ind AS is applicable to all listed NBFC companies irrespective of their net worth. Ind AS is applicable to unlisted NBFC companies whose net worth is more than 2 crores. If Ind AS is applicable to a company, then it will be automatically applicable to the holding company, its subsidiary, associate and joint venture company, right? As simple as that. Sir, we understood the applicability part. What about the exceptions? Ind AS is not applicable to non-corporate entities. Means Ind AS is not applicable to partnership, proprietorship, Hindu undivided family, association of person, body of individual, your trust. Ind AS is not applicable to cooperative societies as well, right? So Ind AS is not applicable to non-corporate entity. Ind AS is not applicable to SME listed companies, right? If your company is a SME listed company, Ind AS is not applicable. Ind AS is not applicable to insurance and banking companies. Friends, initially when Ind AS came, it was made applicable to insurance and bank. Then IRDA is the regulatory authority for insurance company and Reserve Bank of India is a regulatory authority for bank. These two authorities decided that this is not a right time to apply Ind AS on banks and insurance companies, right? And that is why, friends, on insurance and banking company, Ind AS is not applicable, right? Is that clear? On insurance and banking company, Ind AS is not applicable right now. But in a year or two, it is quite possible that in India, all the banks and all the insurance company will be subject to Ind AS. But as of now, Ind AS is not applicable to insurance and banking companies. Sir, in that case, which framework they are following? They are following accounting standard, right? So they are following accounting standard. Sir, what about company who are not a holding company, who are not a subsidiary, joint venture and associate of a company where Ind AS is applicable? What about those standalone companies whose net worth is less than 250 crore and they are unlisted company? In that case, Ind AS is not applicable. And friends, here company means unlisted company. I'm talking about unlisted company, right? UL. I'm talking about unlisted company. Sir, what about overseas entities? What about foreign company? For example, I am an Indian company, Reliance. I have a subsidiary in USA. I have a subsidiary in UK. Sir, what about those subsidiaries where Ind AS is applicable to those subsidiary? Answer is no. Even on those subsidiaries earlier where you were preparing under AS, those subsidiaries were never preparing under AS in their local regulations. In their local jurisdiction, they were following the local framework. Like US entity is following US GAAP, UK entity is following IFRS, right? Okay. But sir, one thing I'm not able to understand, for example, that foreign company is a subsidiary of Indian company. Indian company is following Ind AS. Sir, then how this Indian company will do the consolidation? Friends, I'll go one step before. When this Indian company was preparing its accounts under accounting standard, at that time they were also doing the consolidation. So how they were doing the consolidation? When they were having foreign subsidiary, associate and joint venture. So those foreign companies were preparing their accounts as per accounting standard only for the purpose of consolidation of Indian company. Likewise, these foreign entities will prepare Ind AS accounts only for the purpose of consolidation under consolidation of Indian company. For their local jurisdiction, they will apply only their local GAAP. But for Indian jurisdiction, only for the consolidation purpose, they will migrate their accounts under Ind AS. Is that clear? But for their local jurisdiction purpose, they will apply only their local GAAP, like IFRS, like US GAAP. Okay. Is that clear? Sir, vice versa. If I am a small entity, let's say I am a X private limited, but I am a subsidiary of a foreign company, right? So foreign company is in USA and I am a subsidiary of that foreign entity. And that foreign entity is a US listed entity, or even though the foreign entity is not listed, but its net worth is more than 250 crores. Sir, whether Ind AS is applicable on me? Answer is no. For applicability of Ind AS, you have to look only to the Indian companies, right? You have to look only from the perspective of Indian company, not the overseas entities. Friends, I hope it is clear to all of you. Is it clear to all of you? Is that clear? Pooja has very rightly explained. Pooja has said that sir, it means upward में एक ही holding company होगी and downward में JV, subsidiary, associate all covered. Yes, Pooja, you are right. Friends, I hope it is clear to all of you, right? Very good. Very good. So let's go back to the concept again. We have discussed that on these entities, Ind AS is not applicable, right? On these entities, Ind AS is not applicable. Okay. So I'll come to this part later on. Okay. And if NBFC company is having a net worth less than 250 crore, so if other than NBFC, let's say there is an unlisted company, net worth is less than 250 crore. Can that company apply Ind AS voluntarily? Answer is yes. But NBFC company cannot apply Ind AS voluntarily, right? If its net worth is less than 250 crores. Friends, I have used an example, a case study, just to make you understand completely. Friends, this yellow highlighted, Reliance Industries Limited. Reliance Industries Limited is a listed company, right? Whether Ind AS is applicable on the Reliance standalone? Answer is yes. Ind AS will be applicable. And on Reliance CFS, yes, Ind AS will be applicable to Reliance CFS as well. Okay, friends. Is that clear? Let's go back to the next part. Reliance India Private Limited, RIL India Private Limited, and RIL India Private Limited is a parent of Reliance Industries. Whether Ind AS is applicable to RIL India Private Limited? Yes, because it is a parent. You remember on upward holding company is covered. You remember? There is another entity, RIL World Private Limited. And this RIL World Private Limited is an investor of Reliance Industries Limited. Means Reliance Industries Limited is an associate of RIL World Private Limited. And it is a private limited entity, means unlisted entity, assuming the net worth is less than 250 crore. So whether Ind AS is applicable to RIL World Private Limited? Answer is no. Why? It is not a parent, it is an investor. It is an uncle, it is not a father. You understand this? So Ind AS is not applicable to RIL World Private Limited. Why? Because it is not a parent, it is not a holding, it is an investor. Right? Is that clear? Is that clear, guys? Okay, let's move on. RIL Bank Limited. Sir, RIL Bank is a subsidiary of RIL. It's a subsidiary of RIL. Sir, what about this bank? As I told you, on the bank, Ind AS is not applicable. Even they cannot apply voluntarily. So Ind AS is not applicable to the bank. Sir, then how the bank will prepare its accounts? Bank will prepare its account as per accounting standard. Bank will file its accounts in SEBI, MCA, RBI as per the accounting standard, old accounting standard. Sir, since this bank is a subsidiary, so how this RIL will do the consolidation of this bank? Okay, because RIL is the parent, bank is a subsidiary. So how this RIL will do the consolidation? So in that case, this bank will prepare Ind AS accounts only for the purpose of consolidation under RIL. Is that clear? So बैंक अकाउंट्स बनाएगा Ind AS पे, पर वो क्यों बनाएगा? सिर्फ रिलायंस के कंसोलिडेशन के लिए, बट पब्लिक के लिए नहीं, रेगुलेटर्स के लिए नहीं, ओनली फॉर द पर्पस ऑफ कंसोलिडेशन ऑफ रिलायंस. RIL Insurance Limited, RIL Insurance is again an associate of Reliance. So again, being an insurance company, this insurance company will not prepare its standalone account as per Ind AS. It will prepare as per accounting standard only. It will file its accounts under IRDA, SEBI, MCA as per accounting standard. But of course, since it is an associate, so Reliance is required its Ind AS accounts for consolidation. So this insurance company will prepare its accounts as per Ind AS only for the purpose of getting it consolidated under RIL. Is that clear? Another entity, Reliance India SME Limited. It's a listed on SME Stock Exchange. It's a subsidiary of RIL. Again, Ind AS is not applicable to this SME entity. Why? Because it's a SME entity, right? So it can prepare its accounts as per accounting standard, but for the purpose of consolidation, this company has to prepare its accounts as per Ind AS only for the purpose of consolidation. RIL Info Private Limited, net worth is less than 250 crore. It's an unlisted company, net worth is less than 250 crore, Ind AS not applicable, but it is a subsidiary of RIL. Yes, Ind AS is applicable. Why? Because it is a subsidiary. Yes, because it is a subsidiary. RIL NBFC Private Limited, RIL NBFC Limited or Private Limited, net worth is more than 250 crore and it is a subsidiary. Doesn't matter. For NBFC companies, just not because it is subsidiary, because its net worth is more than 250 crore, Ind AS is applicable to this entity, right? So friends, for NBFC, the rules are separate. Friends, I'll take this part later on. So before that, I'll take the remaining part. RIL XYZ Private Limited, net worth is less than 250 crore, but it is associate of RIL. Yes, Ind AS will be applicable. Why? Because it is an associate. RIL ABFC Private Limited, it's a joint venture of RIL. Yes, net worth is less than 250 crore. It's a private limited entity, but Ind AS is applicable. Why? Because it is a JV. So friends, the special rule or exemption is only given to the bank insurance company, SME entity, right? Bank, insurance company and SME entity. For all other entity, this rule is not applicable, right? This rule is not applicable means exception rule is not there. If other than these three kind of entity, if that entity is a subsidiary, joint venture and associate, or a holding of a company on which Ind AS is applicable, then automatically on these four set of entities, Ind AS will be applicable. RIL LLP, RIL invested in limited liability partnership. In that case, Ind AS is not applicable to LLP. Why? Because it is a non-corporate entity. RIL Africa Limited, it's a foreign entity. It's a subsidiary of RIL. Whether Ind AS is applicable to overseas entity? Answer is no. Ind AS is not applicable to foreign company, but that foreign company will migrate its accounts in Ind AS only for the purpose of consolidation of RIL. Sir, although it is not related to Ind AS, for example, there is a company in US and that company is having a subsidiary in India. How that US company will do the consolidation? In that case, this Indian company has to migrate its accounts in US GAAP, right? This Indian company has to migrate its accounts in US GAAP only for the purpose of US parent consolidation. Likewise, if Indian entity has a foreign entities, foreign subsidiary, joint venture and associate, those foreign company has to migrate its accounts under Ind AS to get it consolidated under Indian company. I believe it is clear to all of you. I believe it is clear to all of you guys. Yeah. I have taken a lot of examples to explain each and every concept here. Friends, now let's discuss about this RIL NBFC Limited. Friends, this RIL NBFC Private Limited or Limited net worth is less than 250 crore and it is an unlisted entity. It is a subsidiary of RIL. Whether Ind AS is applicable, friends, there is one rule which is given in 30th March 2016 notification. And what is that rule? It is very simple. They have given a special exemption to NBFC companies. What they have given, they have said that if NBFC company, on NBFC company, you have to check the criteria relating to that particular company. For example, whether that NBFC company is a listed company, answer is yes, Ind AS is applicable. Whether that NBFC company is an unlisted company, but net worth is more than 250 crore. If yes, Ind AS is applicable, right? But if NBFC company is an unlisted company, net worth is less than 250 crore, whether Ind AS is applicable, answer is no, it is not applicable. So the exemption says that if NBFC company is a subsidiary, joint venture, associate, or holding of a non-NBFC company, right? If NBFC company is a holding, subsidiary, joint venture, associate of a non-NBFC company, then Ind AS will not be applicable to this NBFC entity just because Ind AS is applicable to this non-NBFC entity, right? So NBFC entity पे क्योंकि ये सब्सिडरी जॉइंट वेंचर या एसोसिएट या होल्डिंग है किसकी, नॉन एनबीएफसी की, तो ऑटोमेटिकली इस पे इंड एस अप्लाई नहीं होगा. दैट इज व्हाई ऑन दिस RIL NBFC private limited, I'll use the word private limited here so that you will not get confused. This RIL NBFC private limited whose net worth is less than 250 crore, since it is a subsidiary of a non-NBFC, that case Ind AS is not applicable to this entity, right? Why? Because it is a NBFC entity. Is that clear? But this NBFC entity has to prepare its accounts as per Ind AS only for the purpose of Reliance consolidation. Is that clear, friends? Vimal is asking if SME entity's net worth is more than 250 crore, is Ind AS applicable? Vimal, in that case, it is voluntarily applicable, not mandatorily applicable. Very good. Now, sir, you talked about net worth, right? You talked about net worth. For unlisted company, you talked about net worth. What is the meaning of net worth? And from where we can see the meaning of net worth? So friends, net worth is defined under section 2, subsection 57 of the Companies Act 2013. What is the meaning of net worth? Meaning of net worth is up share capital plus security premium plus reserves created out of profit minus miscellaneous expenditure. Right? Sir, whether net worth has to be checked on the basis of, for example, the company is preparing standalone as well as consolidated. So net worth has to be checked on the basis of which financial? Whether it is standalone financial or consolidated financial. So net worth has to be checked on the basis of standalone financial. Okay? It has to be on the basis of standalone financial. Right? Is that clear? Sir, if the company is preparing quarterly accounts, right, the net worth has to be checked. For example, in the month of June, in the quarter of September, in the quarter of June, if net worth has exceeded 250 crore, but at the end of the March, net worth has gone down, net worth has become less than 250 crore. So which period has to be seen? Net worth has to be seen. Net worth needs to be checked on the basis of year-end audited financial statement, right? Year-end audited standalone financial statement. Is that clear? Net worth has to be checked on the basis of year-end audited financial statement. Next, sir, for example, there is a ABC Private Limited. And the net worth is net worth. In FY 2019-20, let's say 190 crores. This is amount in crores. In FY 2021, it becomes 210 crores. In FY 21-22, it becomes 270 crores. Let's say it crossed 250 crores. So Ind AS is applicable from which year? So 31st March 22, net worth has increased, net worth has crossed 250 crores. So Ind AS will be applicable. In this case, Ind AS will be applicable immediately from next year. What is the next year? That is FY 22-23. Right? Ind AS will be applicable immediately from next year. That is FY 22-23. Sir, what happens if in the next year, let's say you applied Ind AS, in the next year in 22-23, due to the losses, the net worth has gone down by 180 crore, gone down to 180 crore. What happened? So can we go back to accounting standard? Can we go back to accounting standard? Answer is no. Answer is no. Ind AS, once applicable, it cannot be moved back to AS. Right? So Ind AS, once applicable, you have applied it, means from 22-23 it becomes applicable. Doesn't matter if the net worth become negative, still Ind AS will be applicable forever. Right? I hope the concept you have well understood. I hope you have well understood these concepts. Friends, please let me know if you have any question so far. Please do let me know if you have any question so far. Yeah. I hope you have understood this thing. Yes. That clear? I hope with this example it is very much clear. Any question? Are you clear? You are clear. Is it clear in mind or is it clear from mind? Is it clear in mind or is it clear from mind? Clear in mind. Very good. Very good. Yes, yeah, you are right. Means once you have adopted Ind AS even voluntarily, for example, you are a normal company, means non-NBFC company, and your net worth is less than 250 crore. But you want some, foreign investors' money into your business. So you have applied Ind AS voluntarily. You have applied Ind AS voluntarily. In that case, even though you want to go again back to accounting standard, you cannot withdraw Ind AS in future, right? Okay. Now let again go back to the slides. I hope my PPT is visible, friends. So these are the things which I have already discussed with all of you. So quickly I'll again discuss. Insurance and banking companies are not allowed to apply Ind AS even voluntarily. They are not allowed to apply Ind AS even voluntarily, right? Companies that are listed or in the process of listing in SME exchange are not allowed to apply mandatorily. But if these companies wants to adopt, it can adopt on voluntary basis. Bank and insurance companies, complete no. But for SME companies, voluntary, they can apply. Mandatory, there is no mandate. Companies whose net worth is less than 250 crore, on those companies, Ind AS are not mandatorily applicable, right? Or the companies which are not a corporate entity, for example, non-corporate entity, partnership, proprietorship, HUF, trust, cooperative society, on these companies, Ind AS is not applicable. Net worth has to be calculated as per section 2, subsection 57 of the Companies Act 2013 and calculated on the standalone financials. Ind AS is applicable to consolidated as well as standalone. Ind AS once adopted, either voluntarily or mandatorily, it cannot be revoked in the prospective years, right? As an Indian company which is subsidiary, associate or JV of a foreign company should prepare its financial statement as per Ind AS if it meets the Indian criteria, not from the foreign company criteria, right? The foreign or overseas subsidiary, associate and joint venture of Indian company may prepare its standalone financial statement in accordance with the requirement of their local jurisdiction. But Indian parent will have to mandatorily prepare its CFS as per Ind AS if it meets the criteria covered in roadmap. And those foreign entities have to migrate their accounts as per Ind AS just for the foreign company's consolidation. Please do let me know if you have any query. Okay. Viraz, Nisha, Krishna, Rajiv, Abhishek, Manikant. I hope it is clear to all of you. Yeah. Is it clear to all of you guys? Very good. Let's go back. Let's move forward. Net worth, I have already told you, section 2, section 57, standalone financials, right? Net worth has to be calculated on 31st March 2014. It was for the first year, right? So this is not applicable right now. So now you need to see the last year net worth only, okay? So calculation, I have already told you. Now we will discuss some case study to check your understanding on this Ind AS applicability. ABC India Private Limited is having a net worth of 100 crores and it is a subsidiary of ABC USA LLC, right? The foreign company's net worth is 1000 crores. Friends, this is a private limited company, net worth is 100 crore. Ind AS applicable or not applicable? As per its own criteria, not applicable. But it is a subsidiary of ABC USA LLC. This Indian company is a subsidiary of a foreign company. And foreign company net worth is 1000 crore. Do we need to check this foreign company net worth or foreign company criteria? Answer is no. Advise the Ind AS applicability on both these companies. First of all, tell me whether this Ind AS is applicable to foreign company. Answer is no. Whether this Ind AS is applicable to Indian company, just because it is a subsidiary of a foreign company whose net worth is 1000 crore? Answer is no. For Indian company, you have to see the criteria of Indian company only. Had it been the subsidiary of an Indian company only, ABC India Private Limited, is, let's say, a subsidiary of ABC India Limited. And that company, ABC India Limited, is having a net worth of 1000 crore. Then Ind AS would be applicable to both these companies. But since this Indian company is an unlisted company, net worth is also less than 250 crore. So Ind AS will not be applicable to this Indian company just because it is a subsidiary of a foreign company. And what about foreign company? Ind AS, of course, not applicable to the foreign company. I got a right answer from too many candidates. Very good. Okay, let's move forward. ABC India Private Limited is having a net worth of rupees 300 crores. It's a private limited company and it is not a bank. It is not an insurance company. It is a private limited company. And net worth is more than 250 crore. Whether Ind AS is applicable or not applicable? Of course applicable. Of course applicable. Because it is not a bank, not an insurance company, not a SME. This company, Indian company, is having a subsidiary in Bangladesh and Vietnam. Right? So this Indian company has a foreign subsidiary. These companies are very small company with a net worth of less than 50 crore. How does it matter? Even though if these Bangladesh and Vietnam entity has a net worth of 500 crore, it doesn't matter to me. Why? Because it is a foreign company. And Ind AS is not applicable to overseas company. Advise the Ind AS applicability on both these companies. Of course, Indian company, Ind AS is applicable. Why? Because net worth is more than 250 crore. On this foreign company, Ind AS is not applicable. But these foreign companies are the subsidiary. And that is why, not from the regulatory perspective, but from the Indian entity consolidation perspective, these companies need to migrate its accounts as per Ind AS only for the consolidation purpose. Right? That right? You are right, Yukta. You are right, Pooja. You are right, Tanisha. For consolidation only, Ind AS is applicable to these foreign entities, but not for the filing purposes. Very good, guys. Wonderful, wonderful participant. Awesome. Case study number 3. ABC India case study. ABC India is a listed company in India. Ind AS applicable or not applicable? It is not written that it is a bank, insurance, SME, not written. Ind AS applicable, very good. It has a subsidiary XYZ India. ABC India is a listed, it has another subsidiary which is XYZ India. And this subsidiary is also listed, but this subsidiaries are listed on SME stock exchange. Now you tell me whether on this subsidiary Ind AS applicable. Answer is no. Why? It is a SME listed subsidiary. But since it is a subsidiary, so this subsidiary has to prepare its Ind AS accounts only for the purpose of consolidation of ABC, right? And this ABC also has an associate, and this associate is a bank. So whether Ind AS is applicable on this bank? Answer is no. But since this bank is an associate, so then this bank has to migrate its accounts under Ind AS only for the purpose of consolidation of ABC India Limited. You know na? Associate consolidation, you are aware? You remember? AS 23 for associate consolidation. In Ind AS, it is Ind AS 28. Yeah. So advise the Ind AS applicability on such companies. For ABC India, Ind AS applicable. For XYZ and bank, Ind AS not applicable. But being a subsidiary and associate, these companies have to migrate their accounts under Ind AS just for the purpose of ABC consolidation. Everyone has given right answer. Everyone has given right answer. Right. Now I can say that uh, clarity is in mind, means it is clear in mind, not clear from mind. Right? Very good. Question number 4. ABC Limited is having an investment in ABC and Associates LLP. Okay. So ABC is applying Ind AS. It is written that ABC Ind AS applicable. Advise the applicable gap on LLP. On LLP, which gap is applicable? AS or Ind AS? Of course, this is a non-corporate entity and not Ind AS. AS is applicable. On this company, AS is applicable, right? Not Ind AS. Clear? Question number 5. A Limited, a listed company, is an associate of ABC Private Limited. A Limited is a listed company and it is an associate of ABC Private Limited, right? Net worth of ABC is less than 250 crores. This is a very tricky question. A Limited is a listed company. Now you tell me whether Ind AS is applicable to A Limited. Answer is yes. This listed company is a nephew. Nephew means associate. This listed company is an associate of a private limited company. See, the upward company is an investor. The downward company is an associate. You understand? A Limited is an associate of ABC Private Limited. Net worth of ABC is less than 250 crores. Net worth of ABC is less than 250 crores. Advise the Ind AS applicability on A and ABC. Friends, if Ind AS is, so who is A Limited? A Limited is an associate. It's a listed company. Ind AS is applicable to A Limited. Who is ABC? ABC is upward entity, but it is not a holding. It is an investor. So on A Limited, Ind AS is applicable, but on ABC Private Limited, Ind AS will not be applicable. Why? Because it is an investor, number one. Number two, this is a private limited entity with less than 250 crore of net worth. Sir, since this ABC Private Limited, you are saying Ind AS is not applicable. So of course, AS will be applicable, right? Yes. Now, A Limited is an associate of this ABC. So this ABC has to do the consolidation now. And ABC is preparing its accounts as per accounting standard. Sir, how ABC will do the consolidation in that case? In that case, this A Limited will prepare accounts as per accounting standard for the purpose of consolidation of ABC Private Limited. Is that clear? Is that clear? Yeah. So this A Limited will prepare the regulatory accounts for SEBI, for MCA, for anywhere in the world under Ind AS. But for the purpose of ABC consolidation, this A Limited will prepare AS account, right? Clear? Is it clear? Okay. Now, last study. ABC India Limited is a listed company in India. Ind AS applicable or not applicable? Of course, applicable. It has a subsidiary, and this ABC India is a non-NBFC, and this has a subsidiary which is an unlisted NBFC, and net worth is also less than 250 crore. Friends, do you remember that exemption? Now you tell me, although this NBFC is a subsidiary of this non-NBFC, right? And Ind AS is applicable to this entity. Whether Ind AS is applicable to this unlisted NBFC, whether Ind AS is applicable to this non-NBFC. What is your view? Whether the Ind AS is applicable to this NBFC. It is a subsidiary. You are right. Ind AS is not applicable to this NBFC company. Why? Because on 30th March 2016, MCA said that since going by its own criteria, Ind AS is not applicable. Why? It is unlisted, number one. Number two, net worth is also less than 250 crores. So going by the individual criteria, Ind AS is not applicable, right? So if on a NBFC, Ind AS is not applicable going by its own criteria, means neither it is listed nor it is having a net worth of more than 250 crores. In that case, Ind AS will not be automatically applicable to this entity just because it is a holding, subsidiary, joint venture, or associate of a non-NBFC company on which Ind AS is applicable. So in this case, on ABC India, Ind AS is applicable. On unlisted NBFC, Ind AS is not applicable. But being a subsidiary, this company has to migrate, has to prepare its Ind AS accounts only for the sake of consolidation of ABC India Limited. I hope it is clear to all of you, friends. I hope it is clear. Clear in mind or clear from mind? You are right, Pooja. ABC is a listed, and that is why it is applicable. NBFC not applicable. Why? Because there is an exemption. Friends, is that clear to all of you? Yeah. So friends, with this, I have created overview and roadmap of introduction to Ind AS and applicability of Ind AS, right? So friends, since beginning, I talked about this global framework of IFRS, how this framework has evolved from international accounting standard to international financial reporting standard. Then I talked about the adoption in convergence. Then I talked about carve out, carve in, and removal of option. Then I talked about this convergence of Ind AS standards. Then I have talked about the applicability of Ind AS from the perspective of India jurisdiction. So see why? Because we have accounting standard, we have Ind AS, we have two sets of standards, right? So on which set of standard, on which set of companies Ind AS is applicable? So we talked this thing in detail with the applicability criteria as per notification dated 16 February 2015 and 30th March 2016. Ritik is asking, sir, whether remembering the date of notification is important. Answer is no. From, I would say, from the expert perspective, it is good. But from the examination or others' perspective, it is not required to remember, right? Is that clear? So friends, now we have the format of financial statement, which is Schedule 3. So friends, just to give you a flavor, there are three divisions to the Schedule 3. Division 1, in the Schedule 3, the format of financial statement is given, right? And when I'm talking about Schedule 3, it talks about format of financial statement. And the next session, which I will be covering, right? So tomorrow, there will be a session on conceptual framework for financial reporting, which other faculty will take. Day after tomorrow, I'll take Ind AS 1 presentation of financial statement. And friends, with presentation of financial statement, I will be taking, format of financial statement. Why not today, sir? Because this format of financial statement is somewhere linked to the presentation of financial statement as well, right? So friends, Schedule 3 talks about format of financial statement. In the format of financial statement, there are three divisions. Division 1, Division 2, Division 3. Division 1 talks about the format of financial statement applicable to the companies who are preparing their financial statement as per accounting standard. Division 2 talks about the companies on which Ind AS is applicable. Division 3 talks about the financial statement of NBFC companies on which Ind AS is applicable. So friends, we will not be talking about Division 1. Why? Because Division 1 is related to the old accounting standard financial statement. We will be talking about Division 2, which is applicable to the entities on which Ind AS is applicable. And this is only applicable to non-NBFC company like Bharti Airtel, like Interglobe Aviation Limited, like L&T Limited, okay, Reliance Industries Limited, Adani Enterprises Limited. So we will be talking about Division 2 to the Schedule 3 only. Division 3 we will not be covering. Why? Because it is only related to NBFC. Right? You will not be getting a lot of questions or probably questions from this Schedule 3 in your examination. But of course, from the understanding perspective, this is very, very, very important to know about Schedule 3, right? This is part of your syllabus. This is part of your study material as well, right? So stay tuned. Day after tomorrow, I will be covering the format of financial statement under Schedule 3 with Ind AS 1 presentation of financial statement. Thank you so much, guys. And I'll just pause for 30 seconds. If you have any question, I will be happy to answer those questions, right? Pooja has a feedback, sir, you teach basics very well. Examples and case study helps more. Please share this PPT in Excel. Thank you, Pooja, first of all, for the feedback. I will be definitely sharing this PPT and Excel file with the ICAI. Viraj, thank you so much for your feedback, and Manikant, uh, kindly give the approach and course for FR paper to excel in exam. First of all, guys, just make the study material as your Bible. Number one, right? Solve all the practical problems from your study material. All the problems. That is number one. Number two, please listen the classes very carefully. Number three, at least you should do the revision 2 times. Number four, right? Number four, important concepts, please write down as a summary, right? In your notebook. Okay. And the last one, do practice with the RTP, revision test paper, past examination paper, do the practice. This is how you will excel in financial reporting paper. Financial reporting is a very practical paper which is used in the real life on a real time basis. So my request is not to just believe in the rota learning. My uh, guidance to all of you is to please understand the concept and then apply the concept to the practical problems. Okay. Shankara, thank you so much, Shankara, for your wonderful feedback, and thank you, Tanisha, for again this nice feedback. So stay happy and stay safe, guys, and please listen this entire video once again if you'll get the time, okay? And please revise the concept, whatever I have taught you. Thank you so much. Bye bye. Take care. Yes.